Hey guys, and welcome back to another video. This time we've prepared a bit of a special topic for you where I really want to discuss the differences between Forex prop firm accounts and personal accounts. We're also going to go through the pros and cons of both account types and what possibilities they bring to a trader. So look, the prop trading firm industry has evolved drastically in the last few years, meaning that traders have virtually unlimited possibilities to become funded with a prop firm. They can choose between different account types and sizes in order to become funded without really risking any of their own capital besides the initial one-time or the monthly fee that the prop firm charges the trader. Now, this allows individuals to work with a significant amount of capital and consequentially earn a specific percentage profit split based on their profits. That being said though, I want to jump in and take a look at the pros and cons of funded accounts. All right, let's first take a look at the pros and cons of funded accounts. Now, the main pros of prop trading firm funded accounts are reduced risk, cheap fees, access to higher capital, and automated account metric systems. So let's break those down. When it comes to reduced risk, we have to mention the fact that a trader is only required to pay an initial one-time fee, which then enables him or her to obtain an instant funding or evaluation account. An instant funding account will allow them to start trading in the live market from day one and then earn a specific profit split based on the profit that is made, while evaluation accounts require to complete one or more evaluation phases in order to become funded and then start earning profit splits. Now, this is a major benefit since there is no additional emotion of losing more capital than you've paid for the funded account or the challenge, which can't be said when you're working with your own personal capital. Another major benefit of funded accounts of prop firms is the cheap fees. For example, a $200,000 evaluation account costs approximately $900 to $1,000, and then upon successfully completing the evaluation, you're eligible for profit splits that average around 80%. Now, when comparing a $200,000 funded account with 80% returns with your personal capital account of $1,000 with 100% returns, we can see that the potential of making bigger returns is a lot greater with the funded account. And as previously mentioned, without any additional risk of losing more capital than the one-time fee that was paid in the beginning. Now, we already slightly mentioned that funded accounts give traders access to higher amounts of capital, but the potential really is quite incredible. Individuals can work with account sizes of over $1 million and earn profits weekly, bi-weekly, monthly, obviously depending on the prop trading firm. But when comparing these account sizes and fees with personal accounts, it's pretty clear to see the difference and the advantage that these funded accounts bring to individuals. And the last pro is the automated metric systems that prop trading firms offer to their traders. In most cases, prop firms have a well-developed dashboard with many automated features that allow the trader to monitor their progress during trading. So for example, a trader can see his trading history, gains or losses, and other valuable statistics that he would normally have to manage manually. Now, this is really beneficial when looking at the amount of time that a trader will save, which they can now focus on analyzing the charts in order to find even better entry points for the trades. All right, now that we've gone over the positive aspects of funded accounts, let's also mention some limitations that don't necessarily benefit the trader. The first negative aspect or con of funded accounts is the evaluation challenge, which is quite difficult to complete successfully. For example, industry average two-step evaluation programs require a trader to reach an 8% profit target in phase 1 and 5% in phase 2 before receiving a funded account and then having the chance to generate profits and become eligible for payouts. Considering all that, you're required to make a 13% profit before you can become eligible to receive payouts from your funded account. Another negative aspect of funded accounts is the specific rules that each prop trading firm has set for individual funding programs. Now, these rules include profit targets, maximum daily loss, maximum overall loss, minimum and maximum trading days, no news trading, and so on. So these rules limit an individual, which can be considered a bit of a negative since they have to adapt their trading style based on the rules that each prop trading firm has set. Now, and the last little con, I guess, of funded accounts that we're going to mention is the limited withdrawal windows that individuals have to request when a payout. Now, unlike personal accounts, prop trading firms have specific schedule-based withdrawal windows. In most cases, this can be weekly, bi-weekly, or monthly, which can be a struggle when you're required to wait to become eligible to request your payout and then wait for the payout to be processed. But in a nutshell, that's sort of the positives and negatives of funded accounts. But let's continue on by covering personal accounts and see what they bring to the table. All right, so here's the pros and cons of personal accounts. I'm going to elaborate on all the dot points in a little bit more detail. So look, the major pros of personal accounts are no limitations on withdrawal windows, 100% of the profit is yours, the possibility of choosing a broker with the best trading conditions, and then no additional trading rules. So let's break those down. Starting with the first positive aspect, let's cover the fact that traders have no limitations on withdrawal windows. Now, this means that the trader can request a withdrawal whenever, with no limitations on the portion of the account balance. They can request a withdrawal of 100% if they want, or only a portion. You could do 20% of the entire trading account balance. The beauty of it is you get to choose. It's completely within your control. The second thing worth mentioning is that when trading on a personal account, you are eligible for 100% of the profits you make since you're trading your own capital. Now, this is different from funded accounts since obviously they allow you to trade with more significant amounts of capital, but they do expect a certain percentage of your profits to stay with them. Obviously, it's how they make their money. Well, part of the way anyway. Now, this can be anywhere from 10% up to 50%, meaning that you potentially can only get half of the profits that you would generate on your funded account. Although while trading on your personal account, it's a very simple process. You are working with 100% of your own capital, meaning that any profit that you make is yours and can be withdrawn whenever without any questions asked. Another major positive factor of personal accounts is the possibility of choosing a broker of your choice. You can compare the brokers and choose to work with the one that's offering the best trading conditions to a trader. You can choose the broker with the tightest spreads and lowest trading commissions. Literally simply deposit your funds into your account and then away you go, start trading. The last little positive factor for personal accounts that I'm going to go over is that you have no additional trading rules. Your hands are completely free with no limitations on the trading strategy that you're going to use while trading. You can hedge, use martingale, scalp, use an EA, trade manually, virtually giving you almost unlimited possibilities for developing your profitable trading strategy. So those are some of the pros of the personal accounts. Let's take a look at some of the cons or the drawbacks. So a major kind of negative aspect of funded accounts is that when you deposit a certain amount of funds in your account, you're working with all of it, meaning you're risking the entire amount of capital that you've deposited in your trading account. This is obviously problematic for certain individuals that aren't disciplined and don't have a well-developed risk management strategy, since they can overtrade or revenge trade after a loss, resulting in a daily loss of a significant percentage of your entire trading account. Another drawback worth mentioning is that since you don't have an automated metric system, you are required to do your journaling manually, which can be quite time consuming. Considering that journaling is very recommended for all traders, this can be a little bit problematic if you're wasting your time manually writing your journal after each trade or each trading day, when you could be analyzing the charts and looking for new setup ideas for the following day, or simply more additional entry points on the given day, which you get with a prop firm account. The last little con that I'll go over is the emotional connectivity to the deposited capital. Now, since you're working with 100% of your capital, hard-earned cash, you risk losing your entire deposited amount. Now, that's obviously looking at it from a pessimistic view, but it's a reality. And this obviously just result in general stress or the possibility of emotions taking over rather than being logical in the decision making. And then mistakes start to happen, and then your account balance, it can go one way very quickly. So that's sort of covering the pros and cons of funded and personal accounts in a bit of a nutshell. We can conclude pretty safely that each of the two has their own benefits and slight drawbacks. That being said though, it is 100% of a trader's choice if they would like to work with a prop trading firm with the potential to manage an account size of greater than $1 million or such huge capital, or simply work on their own with their own money with a personal account and then have none of these additional trading rules and keeping 100% of the profits that they make. And it's really going to come down to personal preference. Well, I'm going to conclude this video with just a really quick general comparison of funded and personal accounts based on the pros and cons that we went through earlier. I haven't really got a spreadsheet or a diagram here to show you. We're on the homepage here of the website where you can jump in and have a look at heaps of information that we go through in a lot of depth here at Forex Prop Reviews. But let's just quickly tie this all up. So look, when regarding risk, funded accounts are definitely a better option since you can only lose the one-time fee that you paid for the account, which is quite minimal compared to the capital that you are trading with. But with personal accounts, you're working with all of the deposited funds and then run the risk of losing your entire account balance. When it comes to prices, funded accounts are quite efficient since you can get a 200 grand evaluation account for $1,000, which when successfully completed can generate incredible returns once you obtain the funded status. Another difference, the huge amounts of trading capital you can access when you're working with your personal account, depending on how much capital you've got, obviously you're working with all of that. But prop firms, they're giving you capital for a relatively small fee to work with. So that's a nice comparison there. Depends on which one you prefer. A very underestimated factor as well that I should mention is the dashboards, and I touched on the automated metric systems that prop trading firms offer. You don't need to manually journal all of your trades since you can monitor everything straight from the trader dashboard. I think it's a really valuable feature since it just saves a lot of time each day that you can use for other important things, again, like analyzing charts and looking for additional trade ideas, etc. When we're looking at trading rules, it's true funded accounts from prop firms have trading rules compared to personal accounts that have no rule limitations, but this can be a good thing since every trader, required to develop a risk management strategy, which is so imperative to have. So you remove the option of over trading without actually waiting for the trade setup that you've come up with. And then lastly, there's the emotional connectivity to the Forex trading accounts. And when you're trading with your personal account and you're knowing that there's a possibility to lose your entire balance compared to a prop trading firm account where it's just not possible, you're really only risking the initial fee that the account costs. So emotions will play a major role. Being emotional while trading is in most cases not a good indicator and can often mean that there is stress involved and more mistakes start occurring. And that's obviously going to negatively impact the account balance and the progress in making good returns on your trading account. So all of this is worth keeping in mind. Well, that's what I've got for you on this topic, guys. So what do you think is better? Do you prefer trading on your own personal account that you open through a broker, or are prop trading firms the way to go? Let us know your thoughts and experiences while trading with personal and funded prop firm accounts and which one you prefer. Comment below. Would love to know your thoughts and experiences. If you liked the video as well, don't forget, give us a thumbs up. And if you haven't already, subscribe to our channel so you don't miss any more videos that we release about the prop trading firm industry. Take care in the meantime. I'll see you in the next one.